Hello, welcome to Smart Investing with Philippe. I hope you all doing well. Yesterday I didn't make a market update because I wanted to see the dust settle about this famous Liberation Day, about the tariffs, about what exactly was the plan with Donald Trump and what type of tariffs they were imposing to other countries as a retaliatory tariff or reciprocal tariff. So we have seen the result. I mean, it's worse than expected. I believe that almost everyone didn't expect that it would go that far. And we can see now that the market quite overreacted. And the aim of this market update is to see exactly where we are technically, because we can only evaluate where we are technically to understand where the market is going to go from this point on. And if there are any deals or any good deals we can do to take advantage of this market pullback. But most importantly, please stay with me until the end of the video because I want to tell you a very important message. This is in a very important time in the market. We are finally seeing the market crashing. I mean, when you have days like some stocks do minus 25, minus 30%, minus 15%, even some mega cap like Apple do minus 10%. It's not every day that you see that. It's like typical crash day in the market, like you see in 2022 or back in 2020 or back in 2018 or back in 2008, 09. Proper market crash. Like, see, if you have never experienced a one-day market crash like this, then this is the experience that you have experienced now. So you need to understand exactly what you do from now. But the worst thing I can do is to sell at this point, because you have been so much down. Why you want to sell or liquidate when maybe 90% of the downside is already priced in. It's too late. It's too late to jump out of the boat. And I believe jumping out of the boat and coming in the boat, this timing is a very difficult trick to do. Then it's better to be and to stay in the boat. I mean, now you have a lot of discount for QQQ, for SPY, for Max 7, from a lot of stocks. It's true you have a lot of red in the portfolio, but I'm with you. I'm also in the market. I have a lot of red in my portfolio too. But I know that this will recover. This is only temporary. All these countries, they will come to the table, they will negotiate, and at the end of the day, they are calling Donald Trump a protectionist or whatever, but I don't believe he's a protectionist because he wants the other country to diminish the tariffs. So who is the protectionist? The one who have higher tariff, or the one who try to make this tariff disappear? So at the end of the day, say if every country in the world has a 0% tariff, that would be even better. And this is what I call free trade. When you see some of the tariff that he has shown on his chart, this is staggering, like 60, 50, 90. I mean, this is not free trade, And I wonder who is the real protectionist, I was amazed by myself when I saw these numbers, I didn't expect so much import tax from the European Union, China, or some other country that he was referring to, like Japan. I mean, this is terrible, and at the end of the day, he's trying to get those tariffs coming down, so that they can have more free trade. So the one who said that this guy is a protectionist, I mean, they don't understand what is protectionist. What he's doing is a reciprocal tariff at the half price. So it's not even matching the rate. It's half price the rate with a minimum of 10%. This is what it is. At the end of the day, they will all come to the table. They will come to negotiate. And all this will be only short-lived, and the market will recover. And that's it. And if not, then we will go maybe in a small recession. And the market will correct a bit further down. There is not much down to correct, But then if we have a recession, maybe another 10% down, and then that's it, and then you will go through this full recession cycle, and then we'll come out of the other side, and then you have another 2 years of upside rally. At the end of the day, this is the way always it plays, So don't worry too much. I understand, very difficult and painful to lose money, but as long as you don't sell, you don't really lose money. It's like if you have a house and now there is a crash on the housing market, then you would rush to sell your house because the market now price your house half the price that it was maybe 1 year ago. Nobody does that because your portfolio, you see it every day, then you panic. But your house is the same thing, right? You can maybe want to sell your house at the worst time possible. Your house value collapsed by 50%. We've seen that in the great financial crisis. We've seen that, and then 2 years later, your house been worth 200 times more. But Nobody rushed to the market to sell their house at the same time as everybody else is selling. And it's exactly what happened right now in the market. Everybody wants to get out of the stock market and everybody wants to sell. Everybody wants to sell when everybody is selling. The worst time ever to sell. Just sometimes it's good to pause, maybe take a step back and just evaluate your situation. Anyway, you should never invest your money that you cannot wait for 1, 2, or 3 years in the stock market. Never do that. Get some cash on the side if you need the cash, but the stock market money is a money and you must have an investment horizon of minimum 3 to 5 years. On 3 to 5 years, the likelihood you lose money is very small. But of course, if you invest for 2, 3 months, you can be trapped in a down market right now and then lose money, but on short term. But it will recover eventually. Always recover. You can look back at all the chart. We're gonna see the chart. We're gonna see where we are. We're gonna see what we're gonna do, if there are some opportunities. But I believe when the market goes down so much, the best opportunities is to buy the indices, not buy specific stock, unless you have very high conviction names that you want to buy. But already buying the index on the risk-reward basis is extremely good. When you have 20% discount, sometimes more, like IWM, the Max 7, I mean, the discount is so big that investing in the index itself is already a good risk-reward investment. Why go into individual stocks? The index always recover. Individual stock, some of them never recover. That's the difference between indices and the stocks. Anyway, let's go through this. But before doing that, please subscribe, like, and leave a comment. And don't worry, we're going to go through everything today, and then we're going to conclude. And stay with me until the end of the video because that's a very important message I want to give. Thanks so much. Let's go. Okay, let's start with QQQ. QQQ clearly broke down the 0.78 Fibonacci retracement, and now we almost fully retrace back to the level of September 2024. So, technically, we have rebounded to the full retracement. If it breaks below that full retracement, then we will probably go to the next level of 440, because that's the lows of August last year, when actually the market corrected by more or less 15%, 16%. You see, it's a huge drop. Last year we had a 15% correction, and then eventually we closed the year as a positive, and massively positive, for plus 23%. Now we are done already. How much? Let me see. On the QQQ, we are only done 16%. 16%, 16% is exactly the same level as we had last year in 2024 for the unwinding of the carry trade in August. So you see, what we are calling a great collapse and a great crisis and everything is exactly the same downside from peak to trough of the QQQ last year. You see, you don't need to go that far to see exactly the same type of downside in the market in the QQQ. And if you had invested at the bottom of the downside of 15, 16% back in September, August last year, then you look at all the upside that you would go, in just a few months' time, From August to December, the market recovered 30%. 30% only in 2-3 months. 30%. So don't panic, We've seen that last year. Same level, same magnitude of downside. So even if we go even lower, because if there is a recession, probably we're going to go down maybe to the bear market territory of minus 20% or plus. And that's it, that's the way we have to do. That's the way we have to go. Sometimes you have to go through the tough time to make yourself a true investor, a true professional investor who understands what is the tough time and to go through the tough time, not to run through the hills or to run like a chicken and just never come back, If you are already down 16% or 17%, no point running. You already make the whole trip down, Just wait and just come back with the market. If you can, make some top up, average down, DCA, QQQ will be there in 100 years, still there, the index will not go anywhere. Even if the underlyings will change, QQQ will stay the same, stay there, always go up. Okay, if you look at the Okay, now let's move on to the S&P 500. Same. Look, we are now down only 12%. Can you believe that? Only 12% downside. And the whole market is panicking. 12% downside. Last year, we had about 10% downside in August. So this 10% downside, 12% downside is very common for the S&P 500. That's why people are panicking. We had one in August, we had one here. Now we have again one now. You shouldn't panic for 12%, you know. I understand some individual stocks plunge much more than 12%. But from an index point of view, 12% is not dramatic, you know. Still have a lot of rooms for the downside, you know. And the volume is high, but not as high as the one we saw before, you know. So let's have a look now at IWM. IWM, that's probably the most dramatic downside I ever seen, you know. IWM is very serious what is happening with it, you know. Look at this from the upside. Now we're already down minus 23%. 23% is already bear market for IWM. And we have penetrated back. We have entered back into this trading range back to 2022 when you have upside, downside, upside, downside, upside, downside, upside, downside. And now we have entered back into this trading range. So to get out of this trading range, it's going to take some time, you know. But it's a good opportunity. It's a good entry point for the one who wants to invest in IWM. Me, I'm already well exposed to IWM. I don't want to top up my investment in IWM, even though I believe 19,000 or 191 is a very good entry point technically. And it's very cheap because the last time we had that level was back in 2022, at the low of the market 2022, almost halfway to the downside of 2022. And after that, we traded a sideways for 2 years. Then we break out in 2024, and now we are much lower than even the level of 2024. So all the profit we raised from 2024, and we are back to the. It's almost like for 5 years you have not seen anything for IWM. No return at all. And that's very unusual for the small cap to do nothing for a period of 5 years. So maybe that's the one we should maybe focus. If you have no position in IWM, maybe that's a good time now to buy IWM. Of course, the VIX increased by 29% today, which was very much expected. So we go back to the level of the last time we had a peak. Huh? The last peak we had on the VIX was on the 11th of March, and we are back right at the same level. You know, not surprising. The VIX has increased a lot together with the market downside, which is always the same situation. Max 7 has plunged quite dramatically. You see, the Max 7 has plunged by 6%. It actually broke down the 0.71 Fibonacci retracement level. And now we haven't touched the 0.78 Fibonacci level retracement. But I believe now we have a doji, which uncertainty candle bar, you know, where you have like a small body and two big tail, you know, upside, downside. That means the buyers and the sellers, they don't know where the market is going from here. This is the sign of uncertainty, deep uncertainty in the market. The volume has been quite high, which means there is a lot of buyers also coming, you know. Of course, a lot of sellers, but also a lot of buyers. So Max 7 definitely, if you are convinced these are the best company in the world, and then you miss the opportunity to buy Max 7 when it was very expensive back in December. Now you can buy at a discount of more than 25%. Yeah, 25% discount. 25% discount for the best company in the world, the technological company in the world. I mean, that's really worth it. You get Amazon on discount. You get Apple on discount. You get Google, Meta, Microsoft, Nvidia, Tesla. I mean, what do you want more? These are this. If I have to choose only to invest in few companies, I would put all my money in those Max 7. You know, these people are not going to be so much impacted by tariffs. They are selling immaterial products. A lot of their earnings are into services online and so on and so on, not like hard products that are taxed with tariffs. So I don't think that the impact on tariff will impact a lot of the earnings. So what I will do, probably not today, because I want to see tomorrow where the market is going. I want to see the dust to settle, but what I will do is I will top up again my max 7 position. The last time I top up my max 7 position was at 46.30, and now I will buy at 44.43. I will DCA down, because these are the best company in the world, I didn't want to buy it when it was back in December. Now it's 25% cheaper. The PE are much more reasonable. The low 20s. Earning growth is still very expected to be still in the two-digit side. I mean, what do you want more? Maybe it will go down and test the 0.78 Fibonacci level, back in the level of September last year. But this is a great opportunity to buy a bunch, the biggest 7 company in the world, and probably the most successful company in the world. And these are global players, they are not like local players, If you invest in this company, you invest like in a global funds, This is a great opportunity to buy them. Great opportunity to buy them. Health. Can you believe health, huh? Minus 18.8% in one day. Health. 18.80% in one day. This is crazy, huh? Crazy, crazy stuff. This company is very cheap. Very, very, very cheap. Look at the balance sheet. Look at the revenue. Look at everything they do. They sell makeup. They sell all beauty products. Low end. Estee Lauder, they sell the high end. Health, they sell the low end. Go into the balance sheet. Go into the cash flow. Go through everything. These are great company to buy for the long term. Health and Estee Lauder. I mean, this is crazy, MicroStrategy, funny enough, is holding quite well. Not so much big plunge. Minus 10% for MicroStrategy is nothing. Nike also a big plunge, of course, with tariffs and everything. Nike has taken a huge hit, Now it's trading at 56. I think the last time it traded at 56 was around the COVID time. 24% from 75. I have some Nike at 75, so I'm already 25% down. The last time we saw is even lower, the price even lower than COVID time. Can you believe that? Even lower than COVID time. Look at what happened when the COVID low just finished. It just went from 59 to 179 in just 1 year and a half. This is what happened with this extreme movement, You have extreme movement on the downside, and after that you have extreme movement on the upside. The last time you had the price of this of Nike, you have to go back to 2017, almost 10 years. Almost 10 years you have to go back. You have a discount for this Nike of 10 years earnings, 10 years earning growth. Go back, you can buy this company. And if you look at 10 years ago, I mean, Nike was, let me see the earnings 10 years ago. Earning per share, 0.46. Today, 0.54. Almost 50% higher. Almost 50% higher. The revenue back then, 8.55 billion. Now, 11.27 billion. Can you imagine, huh? You have more sales, you have more earning per share, same price. I mean, for me, it's a no-brainer. Nike, great company to buy. Great company to buy. Otherwise, the stocks, chips, broke the 200 level. That was the quite support level for a long time. This 200 level was a great support for a very, very, very long time. But then it broke down, and now we are back to the very, very strong second support of 180. And we broke that support of 180 slightly to go back to 172. Also, if you want to invest in the future of technology, if you want to invest in the best company in the world on the microcomputers, microchips, everything doing about AI, robotics, all these great technologies that will be very dominant in the future, that is a basket of companies, the best you can buy at a very big discount, you know. Look, from the peak, now you have a 35-36% discount from the peak. You are back to the level of 2022 before the crash. That means if you invested in 2022 in semi, today you've done nothing. 3 years, nothing. This is a very interesting time, you know, a very interesting time to invest in the stock market. You know, the pain of losing money is also the joy of buying a lot of this investment at this discount price, you know. Interestingly, AMD still defending the 0.78 Fibonacci retracement, you see. Don't want to break it, touching it again. It touched it in the 3rd of March, touch it again today, but not much lower, you know, 95, 96 is a level that the market wants to protect AMD. Maybe that's a sign that the market thinks, hey, 95, 96 AMD, that's the minimum floor. We want to keep that stock, you know. Unless a another huge shock that will depress AMD, but what else do you need, you know, to have that stock going much lower than 0.78 Fibonacci retracement? This is already a huge shock, you know. Look at the plunge of the markets, you know. See, if AMD is resisting that level, that means something, you know. Palantir also resisting, you know. Not so much downside for Palantir. Very interesting that a lot of retailers, they are not panicking and sell Palantir. SMCI, back to the 30 level. Great price for SMCI. Great price, you know. Very volatile, but the usual price is 40. Down to the 32 level is okay, you know. I don't think that the stock has been hammered quite dramatically, you know. Let me see, from the usual part of 40 is 22% discount. It's quite nice to see that still resisting. Bitcoin 82,000, still holding pretty well, you know. Of course, not impacted by tariffs. Why should it be? The dollar, just back to the higher range of the usual trading range of the dollar, you know, exchange rate, I told you, always trading between 110 and 104 for since back to 2023-22. You see that range here, that's the usual trading range for quite a few years. So the dollar is depreciating and is weakening slightly. The 10 years is going much lower, which is good, because I think that the stock market going down, putting a lot of pressure on the job market, maybe on the growth of the economy, that's going to force the hand of Jerome Powell to go down on the rate. And that's probably why the bond market is anticipating the yield to go much lower, you know, because it's already at 4% on the 10 years. Slightly lower than we go below the 4%. And also because a lot of investors are fleeing into bonds for safety, then it pushes the yield lower, which is at the end very good for the economy, because if the yield goes down, then people can do more deal, more loans, more everything. But to get Apple going minus 10%, it's very unusual for Apple to do 10% in one day, you know. How much discount from the peak? Already 22%. Now we approach a very strong support level for Apple. 200 is a very strong support level. You can see one peak, two peak. Now we go back to those two peaks, become a support level. Before was a resistance 2 times, now it's become a support. But you see here we were into a low volume trade, low volume level. That's why the stock price went down quite sharply and quite rapidly. But now we go back to a higher volume trading range, you know. Amazon, back to the 180. Can you believe that? 180 is back to the level of beginning of 2024. Also a huge discount, you know, discount of Amazon of 30%, almost 30%, 26%. Great company, you know. Of course, it's going to be impacted by tariffs with all the goods on the Amazon e-commerce, but the e-commerce is only some part of the business. You have a lot of cloud computing and all these services that Amazon is doing, and is most of their earnings going from there, you know. Amazon is a long-term investment, and now this price is very, very cheap. I never believed that it will go back to the 180 level. The same for Google, lower than 160. It go back actually to July, August last year level. Look at how it rebounded so fast. You know, this type company doesn't need so much to rebound so fast from the lows. Look, we had exactly the same plunge last year. We got a plunge of 23% last year, okay? Then it rebounded from the lows 40%. Now we have a plunge of 26, slightly higher than last year plunge. But you know, we've seen that before. We've seen that before, not so long ago. It was August last year, August, September last year. We've seen the same movie, same magnitude of downside. Maybe not as fast, but Meta, great company also. Now we are actually it broke through the 200 moving average, which is quite unusual for Meta. Look, so long it never break the 200 moving average. You have to go back to January 2023, the bottom of the market, to see that the Meta was trading below the 200 moving average. And at the time, the stock was at the 100 level. But from there, from the bottom of 2023, it just like almost, it went from 100 to 700, straight up, 7 times. 7 times, you know, 7 times the price in 2 years. 2 years and a half, 7 times the price from the low of 2023. Nobody wanted to touch Meta, Facebook at the time. Nobody wanted to touch it. And look, if you touched it at the low of $100, you would make 7 times your investment, 7 times, straight up. So you see, it's not because the market is selling you Meta for $100 that is not worth much more than that, because they're also panicking. Even institutional investors are panicking. They are not God, they cannot know everything. But this is crazy, you know. The first time it broke down the 200 moving average, that's something, you know. It's in 2023. Never managed to break down 200 moving average. Now it's well below the 200 moving average. And it's at a very, very important support. You see, before was a resistance 1 time, 2 times, 3 times, 4 times. 4 times it touched that resistance level. Now it becomes a support at 539. But again, if you buy the Max 7 portfolio, you buy this great company in one portfolio. You don't need to trade each single stock. You just buy this one and that's it. You are covered for all the rest. Even Tesla, I don't think it went down a lot. Minus 5% only. Was not so much impacted today, although that Tesla with the tariff will be impacted, no? Sales number was not so good, but still the stock didn't go so much down, you know? Only minus 5%. Nvidia doesn't manage to break the $100 level. I thought it would break the $100 level, but it's not. Still above the $100 level. And that's the level it broke last year in August, you know, it went even to $91. But this time, don't manage to go below 100, which tells you a lot about the psychological level of $100 for NVDA. Such a great company, so much cash flow, so much earnings, so much margins, so much future, so much prospect, you know. This is one of the best companies in the world you can buy at a huge discount now. Probably 30% plus discount from the high. Yeah, 33% discount from the high. And even after the Armageddon Day, which was supposed to be Liberation Day of yesterday, even after Liberation Day or Armageddon Day, still don't manage to go lower than 100. All right, economic data. Let's have an idea of what happened. Wednesday, ADP employment change 155, forecasted 105, so better than expected. Factor day 0.6%. Today, Challenger job cut 275. Balance of trade minus 122. That's the one that Donald Trump wants to resolve. Continued jobless gain 1,900,000, slightly higher. Initial jobless gain 219, slightly lower. Global composite PMI 53, so nothing about recession. Global service PMI 54, nothing about recession. ISM service PMI is 50.8, slightly lower but not such recession territory. 30 years mortgage 6.6%. The most important number will be tomorrow: government payroll, manufacturing payroll, non-farm payroll, private participation rate. All these data tomorrow are quite important. It should reassure the market. Other than that, we go to the headline. I think the headline will be all about the tariffs. That's it. All over the newspaper, all over TV, all over the financial news, all over whatever the newspaper you can find is all about the Trump tariff, ending the globalist agenda, ending this, ending that. It's very interesting to see the response because they want to respond to the US tariff, but they're already a higher tariff. So what they want to increase again the higher tariff that they already have. Who is the protectionist? I don't get it. I don't care whether you are right, left, up or down. I don't care about politics, but for me, if you already have higher tariffs, why do you want to retaliate to the tariff Donald Trump is imposing on you for half price the tariff that you're already imposing? This is a rationale I don't get. They say Macron said that the EU should shy away from a stronger response to US tariff. They already have a 2 times higher tariff than the US already just want to levy right now. So what response do you want to give? That's very interesting. Already Europe is not growing, so imagine with that. Okay, it's all about tariff. You get a map of the tariff, minimum tariff. Now on the market front, what will be the headline? Tariff again, stock rout depends on tariff shock. As bond rally, Trump said market reaction to tariff is going well. So he doesn't care until the market is crashing. Never mind, of course he doesn't care the market is crashing. He's a billionaire. Why would he care about the market crashing? Maybe he's buying like hell. All of this for the rich people is good. It's only for people who have no money on the side who can top up the investment that are really screaming right now. All is about tariffs. Let's see on Reuters. That's it, the same. Global market wheel as Trump tariff store fear of the economy. Dow Jones minus 6%, minus 9% for the S&P, minus 15% for the Nasdaq. That seems Trump inauguration is not from the top. Huh? That's it. Wall Street reels on fear over trade war, recession, and inflation. The three magic words. You say recession, trade war, inflation, and then you have the market panicking and everybody's selling. Anyway, that will pass. That will pass. Is that that will not last long. All these uncertainties, all this political game, all these is just short-lived. You will see in 6 months' time we will all be laughing about this. For the one who have been through it, if you have sold already, you are not going to laugh about it. You would say, "Oh my God, why didn't I buy the dip? Why did I sell everything and just run for the hill because I was so scared like a chicken?" You have to DCA all your investment. You have to go through this. It's the same in life. Every time you have some challenges ahead of you, or you're going through unexpected challenges, you're not going to run away. You have to go through the challenges and work through the challenges and work on the other side. Then you know the experience of what is it to go through tough time and go from to the other side. I've been through the other side over the last 20 years, 25 years. I've been through many, many, many stock market crashes. So trust me, there will be another side, and we will go through this and the market will go up again and again and again and again and again. And the good thing is that because the market crashed right now, that means if it recovers, we are done for another 6 months, 1 year, 2 years, That's the good thing about crashing. And if we have a recession right now, maybe we are good for another 5 years or 6 years without recession. Who knows? Maybe 2 years. Even 2 years rally, how much it will bring. And if the global economy is collapsing, they're going to inject a lot of money. They're going to do a lot of QE. They're going to diminish the rates. They are not going to let the market die. They are all invested in the stock market. The typical Joe is not investing in the stock market. All the elite are investing in the stock market. So do you think they're going to let it crash? No, they're going to print trillions and trillions and trillions to save it. So never mind, it's just temporary. Remember the COVID time. We would think that the world was ending and that there would be the end of the world. But still, you see, 5 years after, look at where the market is, compared to the lows of the COVID. We will never go back to the price of the lows of the COVID time. We'll never go back to that price. Never, never. If you want to remember, look at this chart. And COVID is not so long, Okay, let's see. COVID, that's the way. Even lower than that COVID. Can you believe? Even lower than that. Look, this is COVID time here. You see? Is the point of control over this investment period is the COVID time. You see how much people accumulated? You see? This is the chart of the QQQ. That's COVID time here, just here. Look at the point of control. It's the highest volume traded ever since 2020 or before even 2020. It's the highest traded volume on the QQQ, on the Nasdaq. People were taking the benefit of the market crashing dramatically during COVID to accumulate the Nasdaq. And oh, go boy, since that low of the COVID, look at how handsomely they have been rewarded, How many percentage? 200%. 200% in less than 5 years. 200%. Do you know? Free time your money. Free time your money in less than 5 years. And while a lot of people are fleeing, a lot of people were buying also. A lot of people were selling, but a lot of people were buying. Guess who is laughing now? The one who were selling or the one who were buying? That's what you have to look at when you see this chart. Whatever chart you can take, take the S&P 500. Same thing. Look. Same, That's COVID low here. COVID low here. Yes, March 2020. COVID low. Since COVID low, for a basket of stock like S&P 500, how much? 172%. You see almost 3 times your investment the same. Almost 3 times your investment. Almost as good as the QQQ. A bit lower than the QQQ. But still, for the risk that you're taking on S&P 500, look at the volume, on the COVID. Look at the volume here. While everybody is panicking, a lot of people are trading. So remember that. Remember that during tough time, this is where fortune are built, It's not when everybody's for more, everybody wants to buy, everybody is high five, then you're going to make a lot of money. It's during this tough time, you're going to make a lot of money if you take the chance to invest. DCA, add to your existing holding, don't sell, everything will recover. Everything recovered from any type of crisis. 2008. You look 2008. Look 2008 and 9. Look at the fall. 2008 was Nasdaq was 78. Today is 541. It will never go back to the level of 2008 of the great financial crisis. Never. Look at the upside from there. Look at the upside from there. And it was much more severe than the tariff talk and the fear of tariff, fear of a recession, and so on. There we were talking about the collapse of the whole global financial system. But look at the upside from there, We never went back to those levels. Never ever went back to those levels. The same we will never go back to the level of the low of the COVID. Never. We will never go back. Last time that we had the COVID, that the tariff with Donald Trump was this 2018. Look, 2018, the S&P also went down dramatically. Went down by 20%. It's just there, you see? Donald Trump point one, tariff minus 20%. But look from the lows of 20% through the COVID crisis. How much percent did? 50% almost. 50% in 1 year, 50%. The end of 2018 crashed 20%. 2019, 50% from the low of 2018, sorry. And after that, we had the crash of 2020, and then bang, we had the following years, the following years from the low of the COVID, we already have like 100%. So don't sell your shares. If you get good quality stock company, good quality shares, it will come back. Always come back. Whatever, this is the end of the world, COVID, whatever, this is the end of the world, global financial crisis, always came back, always recovered, and never go back to that level. Never ever. Because this is the way the stock market is. Over the long term, you never keep growing, never keep growing. Earnings always go up, go up. And if they inject a lot of money in the economy, it will go up even faster. Okay, I think that's it for today. So the key message was, don't sell, don't panic, just go for it. Take advantage of the discount. And thanks for watching. Thanks for watching. Subscribe, like, and leave a comment. And hold on, I'm with you. I go through exactly the same thing as you're going through. So if you want to leave me a comment, leave me a private message, whatever, I'm here for you. So don't worry, don't stress too much, and just relax and take the opportunity to invest. If you cannot invest, hold on to your shares, hold on to your investment, hold on to your indices. You're going to go through this together and going to make money together. It's just a short time. It's just a temporary issue. Everything's going to be fine. Thank you. Have a good evening. Bye.